Are you putting less than 20% down?
And would you like more house and lower payments?
Well, you're crazy if you don't watch this show because changes are happening.
And you need to know about them, and we're here to show you.
Hello, my name is Barry Horvath, and this is Moving Forward TV, your local real estate and mortgage update.
And I am Delynn Guest, and thanks for joining us today. We're sitting.
Ooh.
We're sitting because,
I was confused.
because today we have a guest on the show. We will be, to that empty chair, welcoming a guest pretty soon. And her name is Deanna Case, and behave.
Oh.
And she is with Radian Guarantee.
What do you mean behave? Like I misbehave ever on this show?
No.
Oh.
No.
All right, let's talk about Radian. Radian is a private mortgage company. And for those of you who have less than 20% to put down, you need to watch this because there's going to be great information. Radian owns 29% of the market share out there. So they are actually the largest, Delynn, PMI company out there right now.
Which is great. You know, and anybody knows that if you have less than 20% down, you hear the groans, ugh, I got to get PMI or something like that. And in the last few years, in the last few years, FHA has been the only game in town if you had less than 20% down. Guess what? Not anymore. We are here to tell you that the PMI companies are back, and they are back in a big way. It's not just what we used to have, what your grandma used to have with the monthly PMI. There is different options out there that can really change your life. Thanks, Deanna, for being here with us.
Thank you. I'm excited to be here.
And you have to behave.
Just because of you. Every time we bring a guest on this show, they tell me I got to behave.
Well, because you don't. They know, they watch.
Just be good.
All right, I'll be good.
All right,
I'm gonna try.
Let's get on to FHA and stuff.
Oh, this is where you want me to talk about FHA
Yes.
and the upcoming rules? Okay,
Yes.
The new upcoming rules for FHA. This is so important. June 3rd, bam, if you don't have a case number in for FHA, you own MI forever. Do you know what that means?
That's horrible.
It does.
Yeah.
It means it's never going to go away. Under the old guidelines, FHA could go away in 5 years. Now it's never going away. Not only did it go up, the monthly factor went up to 1.35 recently, and the upfront went up to 1.75. So it's going to be more costly to go FHA.
You know, and they just changed that a couple of years ago because they said that, oh, we're going to increase the upfront so that we can keep the other low.
Yeah, right.
Didn't happen.
Liars.
Go figure. It's a government, right? Government liars? No.
No, they don't go together.
But anyway, some of the differences that we wanted to point out, Deanna was gracious enough to come to our office recently and point out some of the differences that between the FHA and the PMI, because like I said, they've really come back in a great way. First of all, let's start with, FHA, everyone knows the tiny down payments, 3.5%. Yay. Deanna, what's the minimum down payment on a PMI loan?
With conventional, Delynn, you can get as little as 3% down payment on a conventional MI product.
Better than FHA.
Definitely. And although FHA is a great option for borrowers, conventional a lot of times results in a lower monthly payment, and it helps the borrower qualify for a larger home. So it's a great option.
We've done some rough numbers and everything, and comparing them side by side, thanks to Deanna and her wonderful little program, which, by the way, we are going to have a Radian link on here so you can do it yourself as well. But some of the things you can save anywhere from...
Hey. These are my numbers.
That's right, he's the numbers guy.
I'm the numbers guy.
What can you save?
I can say this. You can actually get 19% lower payments, and you can have 23% more buying power. Okay?
Dollars and cents wise.
Yes.
I was like, how much does that mean a month to me?
It means mula.
Mula.
All right. No, here's what it means to the real estate agents out there. It means that they can sell more house because their buyers are going to qualify for more.
Right.
If they qualify for 23% more, duh.
More commission.
More commission, yep. And I know none of them want commission, so it's no big deal to them, right? That's what I'm just saying. And then, of course, they're going to be benefiting their buyers because the lower payment, that's just huge.
And I got to tell you, lately, this is the phone call. This is how the phone calls go from the realtors. Here's a client. Can you qualify them? And I qualify them, and I find out their comfort range and a monthly payment. Buyers don't really care about how they do it. They care about what's my bottom line. What is my monthly payment going to be? And that's kind of all that they really focus in on. I don't blame them. I got kids too. We've talked about that. But the key is if we can get them into a low monthly payment and more house, because inevitably what they're comfortable with, they come back and they say, there ain't nothing out there for this price range. So now we can show them more house.
You're exactly right. With the great thing about conventional MI, there are options. There are several different MI products available to borrowers out there. It's
That's
not
what I like
just
about this.
One option and that's it. One, it's risk-based, so the higher a FICO that a borrower has, the more advantage they have in obtaining different types of financing. You have your regular old borrower paid monthly, like you said, Grandma always knew.
That's right.
There's actually something called a single premium where the borrower can pay it one time up front, and that's it. It's done and over with.
And if you have seller paying closing costs or helping out with that, boom, the seller takes care of paying that and the buyer gets more house. Everybody wins in a situation like that.
They have a split premium, which is actually similar to FHA, where the borrower can pay an upfront and then a lower, very reduced monthly premium. And then there's lender paid MI, where the borrower pays just a little bit higher interest rate, but it's factored, amortized out for the life of the loan. So in all of these cases, the borrower's monthly payment is lower. Their DTI is lower. They can qualify for more home.
Is there a minimum score requirement?
Well, I would say that you can go down to as low as 620. You can get financing up to 97% with a 680. These are Radian figures, but it's very open.
But looking at your charts, I noticed like the 680 borrower seems to benefit the most. So I would say anybody that's 680 or above definitely should consider conventional financing again.
Absolutely. There's so many options these days, and they can get more house, better house, lower payments.
No upfront MI.
Right. This is a win-win.
So I recently qualified a borrower, and I did a comparison of FHA and conventional financing. And with the new MI rates out there right now, I was actually able to save my borrower about $100 a month.
I know, this was huge.
So I told the guy, I said, take the $100, go out and set up a Best Buy account, buy you a new TV.
No, you did not.
Football season's coming. Go into debt
you
further.
And your football.
I didn't say that, but it just went
savings,
with that.
College, all of those things it can go for.
He could do
what
the
could
money.
you do an extra $100 a month?
Actually, they could save. They can invest in their college fund.
It's huge. It's a big difference these days.
It does make a big difference. So.
All right. But anyway, so we have to summarize. Deanna, we cannot thank you enough for being on this show. We so appreciate it.
You're very welcome. Thank you for inviting me.
And Deanna's information, her link to her website, and hopefully some of these wonderful charts and stuff that she gave us, we're going to try and get those onto PDFs so that you can click on down below and get those for yourself as well.
All right, before we go away, can I summarize, please?
Yes.
Okay, remember, PMI costs less.
Yes, it does.
PMI can be canceled sooner, and there are a variety of products available from Radian, of course, that can really help your borrowers out.
Yes. So by all means, please share this show. Get it out. We're out there on Facebook, LinkedIn, Twitter, YouTube, all those things. Get it out on yours as well. We are today and every day
moving forward.
Thanks for watching. We will see everybody next week. Bye-bye.
Hey, and I was good too.
Yes, you were.
I behaved.